Hello and welcome to tonight's webinar. And I would like to introduce to you what I call the 1 Million People Challenge. And it's all about financially liberating 1 million people. It's an idea I came up with already in 2016. And since then, after I announced it at a speech in Los Angeles, I've been working on how to achieve that goal and how to get better and better of it. The key question here is it possible to financially liberate 1 million people by helping them to turn 10,000 US dollars, euros, British pounds, Swiss francs, whatever your home currency is, into 1 million? Because I believe that once you have 1 million cash in the bank, it's quite easy to get an investment that will give you a reliable 10% return, which would equal to having 100,000 per year to live from, which in most countries and for most lifestyles would be sufficient. And in case it isn't, you just keep doing what you did to get from 10,000 to 1 million until you reach 2, 3, 4, 5, whatever the amount of money is that you think you will need in order to live a life financially free and have all the time you want for all the things you want to do, instead of exchanging your time to get some money in order to pay some bills. And furthermore, one of the things that came to mind is that this challenge has to be done in a way that everyone that wants to participate can do that next to a full-time job. Because yes, of course, you can go deep into day trading and you can make your money there, but then essentially you exchange your time in front of a screen working in an office, or your time working for someone else, to time still spent in front of the screen, but now day trading for yourself. So that's not really helpful. It has to be done in a way that people who want to participate can do it next to a full-time job. Because let's face it, not everyone is able or willing to say, I'm now going for financial freedom, I quit my job and I just do that. And the second thing is, people should be able to do that without having to train for years to get the necessary education in order to become such sophisticated and great investors that they could do it completely on their own without any guidance. Of course, everyone has to understand what's going on, what they are doing, what ideas are at the bottom of this, what strategies are going to be used, what about risk management, and how can we get those phenomenal and exceptional results to achieve this, and much, much more. And I think I came up with the answer, and the answer is what I called the 1 Million People Challenge. So who are we? We are basically a group of minded people with common goals. So we want to achieve financial freedom through successful investing. So we want to take our money, want to make it work for us without having to sacrifice our life with endless learning and looking into what's going on, and sacrifice our jobs or all of our spare time. We want to do it in a healthy way that, yes, of course, we do a little bit more than we would without doing it, but the goal is to get our money working without us using half of the day in order to do so. And this is the solution to that. Before we go on, I would like to pay you a little bit attention to our disclaimer. Of course, every time we invest into something or we do something with our money, there's always some sort of risk involved, and we should always be very precise and know what risks are involved, how we can mitigate these risks, what it actually means. Do a proper research on our own and make sure we actually fully understand what's going on, because we don't want to be surprised by things not turning out the way that we supposed they could. So always make sure that you have proper risk management in place, and that you do your own personal and financial assessment on whatever is going on there. For those of you that don't know me, I will have a little introduction to myself. You can see that I'm trading for over 25 years now, and been through all sorts of different kinds of trading, And I personally decided that the sweet spot for me is to do something that is called swing trading, where my trades are on for 1 or several days. So it takes out all the hustle of following charts all day to find the right entry and the right exit and all these kind of things. Of course, I can do that as well, but life is much more relaxed if you switch to higher time frames, and it's much more forgiving. Yes, it takes you a little bit longer to reach that financial freedom, but on the other side, it's far less work, far less competition, and these things can be even done by 13-year-olds. How do I? Because I taught a couple of them, and their results were phenomenal. I did some speaking internationally, was featured in a couple of TV stations and magazines, which I found very flattering. I'm doing this for quite a while now and would love today to share our financial plan with you, which is the exact blueprint and plan that I use together with all the other people in the challenge in order to obtain that financial freedom.
Hi, my name is Jürgen Pallian. I'm a serial entrepreneur, stock market trader from Germany, now living in the UK, and I'm the founder of 24H Profits.
Now, if you're watching this and you want to become financially free, then you're the ones to help you.
My mission is to financially liberate 1 million people and make them financially free. Thank you.
Growing up in a poor family, his parents argued about money all the time. Jürgen swore to himself to change his future, retired at the age of just 35 and became a millionaire. Then he had learned that you become rich by either owning a business or as an investor. However,
if you have to choose, take both.
Jürgen turned to teaching about investing in the stock market, and his students love him.
Jürgen is an amazing teacher because he never makes me feel like I'm stupid or an idiot or anything.
He knows exactly how to do things, and we learned everything we need to know today, and I can't wait to start trading tomorrow.
The strategies even apply to 13-year-old Shane.
He's amazing.
And 13-year-olds can do it. Why can't you?
Visit 24hprofits.com now.
Just a little introduction so you get to know me in case you don't know me yet. You could see a little part of the speech that I gave when I came up with the idea initially in Los Angeles, as I mentioned. And here now, without further ado, is our plan on what we do in order to get steady returns without having excessive risk. One of the things I should mention is that I'm convinced that most people will get to this goal starting at 10,000, going to 1 million in less than 10 years. Now, that still sounds like a lot of time, but if you think about it, you will technically probably be financially free earlier, as even with 500,000 in your portfolio, you will make more money in a year than you probably use. But apart from that, the goal is to reach that million below 10 years. And the reason why it takes so long, of course, is that our starting point is chosen to be pretty low at only 10,000 US dollars. Of course, if you start with 20,000, you cut the time pretty much down in half. We will take a little bit of a look at compound interest in a bit, but that's basically one of the things that we use in order to reach our goal. The first thing that we will talk about are our investment strategies. So we focus on building a portfolio. For those of you that are absolutely new to investing, portfolio is whatever we have in our trading account or in our investment account. If I only have cash, my portfolio is, let's say, 10,000 US dollars in cash, and that's it. If I have 3, 4 different shares, some bonds or whatever, then my portfolio is made up of all of these. Sometimes we gotta get used to some lingo. It's not really complicated, but especially in the financial industry, people are very, very keen on abbreviations and different words that actually are quite easy to understand once someone explains them properly to you. We utilize short-term market opportunities. We have our core portfolio that is built to growth in order to mitigate risks. There's always that saying, don't put all your eggs in one basket. There's a certain truth to it, but if you think about it, we will talk a bit more about it in terms of risk management. It's not always helpful because most of the assets are correlated. That means if you have a highly diversified portfolio of 20, 30 stocks, and you have a stock market crash, well, guess what? All of your 20, 30 stocks will go down. So actually, it's not really helping you to be diversified in that way. The way we build our portfolio is that we either have a long-short portfolio, which means that if things crash down, our short positions will gain, our long positions will lose, or vice versa. And the other thing is that we focus on non-correlated assets. That means if something goes down, the other part might even go up. I will explain a little bit about that in a bit. And then, of course, we need high growth strategies. We need something that gives us returns that are way above what the market does. So we don't only want to have the usual 7, 8, 9, 10%. We strive in a baseline scenario for at least 25% return. What we achieved so far by starting on April 15th this year, today is the 30th of May, a little bit over 1.5 months, or pretty much exactly 1.5 months. We realized nearly 19% in returns. We still have 2 trades open, which look very promising, but since we didn't close them yet, we didn't realize it. We made 19% so far, 18.9 something to be exact. And that means that we are already way on our goal to achieve at least 25% or more. I'll elaborate a little bit on that later. Of course, if we have these returns, we don't want to get these returns with excessive risk. Of course, we could be taking all our money, put it on a roulette table and say, we are convinced that it will be black. And if it is black, we win. If it's red, we lose. If we are right, we double our money. But if we lose, and we have more than a 50-50 chance on losing, that means that we are wiped out. So we don't want to have these high returns with excessive risks. That's where our risk management comes in. Some of the tools we use in terms of risk management is, of course, that we set stop loss orders to minimize potential losses. Means if we put in a trade, we always have something in place, like a line in the sand where we say, in case we are wrong or the market is wrong or anything goes wrong, this is where we take our losses as small as possible, but reasonable. And then we will go on to the next trade. It's just part of the game. We had a phenomenal win rate so far, and we will have losing trades as well. And the key is to minimize our losses and to maximize our profits. And that is what our investment strategies actually do. We regularly review the portfolio to adapt to market changes. For example, today, before the market started, we had PCE inflation numbers, which is the preferred gauge for the FOMC, which is the part of the Federal Reserve, the Central Bank of the United States, that sets the interest rate. And depending on whether these numbers are lower than expected or higher than expected, people try to derive information on whether interest rate cuts that are currently expected to happen will happen once this year or twice this year. And interest rates being the price of money, you can figure out that this will have a huge impact on certain markets. For example, real estate in the United States, if you want to have a mortgage, like they are pretty much 30-year high interest rates. And you can imagine that very few people are really interested to pay a lot for this mortgage. So if the interest rates should come down, it would be good for the real estate sector. Just to give you one example on how we will adapt our view of our portfolio, and then we might put in some real estate investments, for example, or we might put in some bonds in there in order to make some money out of our portfolio, adapting it to changes in the market. And as I said, we want to amplify our returns without excessively increasing risk. Therefore, we pick our investments in terms of where we can be very certain that things happen in our favor. One example recently we had was in a German car manufacturer called BMW. And BMW, we went short on it. That means we made money while the stock was dropping. And the reason why we could expect it to drop was because we did our research and we checked out car manufacturing numbers and some other indicators that were basically telling us that BMW is likely to report that they sold less cars. You can imagine if you produce less cars, there's less to sell. If you sell less cars, your revenue will be lower than expected. If your revenue is lower, your earnings will do so as well. And therefore the stock will drop. And we were perfectly right. So we sold the share in our first step at €103.50. And we then bought it back the very next day at 99, which gave us 4.4% roughly return on our investment. And that is in a single day. And we use these kind of returns every time where we can be reasonably sure that the turnout is very likely in our favor. Of course, it doesn't have to happen all the time, but we certainly will be more right than wrong. And when we right, we will reap the rewards. When we are wrong, we will repair it, take our losses, and move on. And the third thing in our plan is obviously educational resources. So everyone gets on par with what we are doing. Therefore, we have monthly webinars on market trends, investment opportunities. Every trade is completely explained as a setup. So you get based on your portfolio size or the amount of things you will trade, you will know what price to enter, what price to exit, both in when things are going well and when things are going wrong. We will help you with order entry and broker issues, should there be any. Every trade comes as a screenshot, so you see exactly the entry and exit prices and the very exact order of what I do in live real money trading account. And this is the compounding part that I talked about earlier. So compounding, Albert Einstein called it the eighth wonder of the world, is actually helping us to reach our goal. And I'm pretty sure you heard about it, but here is how to see it in action. You can see on the left side, I started at 10,000 and then put in the 25% return in our basic scenario, and therefore it would take us around 20 years to reach 1 million. Now, that is extremely long, and we certainly don't want to wait that much. Therefore, we developed and tested strategies over 2 years with real money, real people, based on the 25 years of experience in investing, and the results we got will come on the next slide. Certainly, we're much better than 25%. If you look at the graph in the middle of the picture, you see that in terms of 50% return, now our goal will be reached in less than 12 years. And as I said, we want to do it in less than 10 years. So on average, we want to have returns that are above 50%. Now, that sounds excessively high, and depending on what your background is, you think that this sounds pretty impossible, but bear in mind that I just gave you an example that worked picture perfectly, where we made 4.5% in a day, in a single day. So we don't need too many of these opportunities in order to achieve these. And in terms of our portfolio, we will certainly have a lot of possibilities to get to these heights in returns and to minimize our risk at the same time. The third graph on the right side, this is basically the doubling your money part, where we would reach our million in a little bit above 6 years. After 7 years, we would be at nearly 1.3 million. Doubling it year over year, however, is quite hard, and I think that our results most likely will be somewhere between 50 and 100% year over year. So therefore, we have the 10-year or less than 10-year time frame. Technically, if we make it in 6-7 years, that's fine. If it takes us 8 years, I'm pretty sure most people won't be too mad about it because I don't know of any other opportunity or investment that will enable you to get from 10,000 to 1 million in such a time frame. These are past results. I started it in 2022 with our first participant, and despite the overall market, which is the S&P 500 in the United States, was down over 18% in that year, she managed to have a return of 43.17%. You see that if you follow the net asset value graph on the bottom, that it's not a straight line up, it goes up and down, but the trajectory is nicely up. We managed in 2022 to make 43.17% in return with the very exact strategies that we are now trading live. In 2023, I took on a second participant, started in May 2023 for our trial before we actually launch it. And it took him a little bit more than 7 months in order to achieve a result of 37.12%. And he started in May. We calculated it from May to the end of the year. You can see in the graph of this chart that before we started, there was pretty much nothing going on, or was slightly going down, a little bit up, going down, and then we started to take over, and we ended the year at 37.12% return. If you calculate that on a full year basis, which this would equal 63.63 returns, given that the growth rate is the same than we had before. Of course, that's a big assumption. We don't know what we would have made from January to May with this participant, but if we elongate it to a one year period, this would roughly be 63%. You can see that the performance I was talking about is actually being achieved in real life, real money accounts from real people, and this is regardless whether the market is going up or down or whatever happened. 2023 was upwards for the market, and we made money. In 2022, the market went down, nearly a crash scenario. We talk about that when from the height we lose over 20% in a given market. So with negative 18%, we were close to that. It just shows that our strategies are very well picked out and resilient in terms of overlying market fluctuations. Let's go a little bit into our investment strategies. I can break them down for you. And one of my favorite quotes, it's not from me, but I love it a lot, is that a majority of uninformed people will always lose an information battle against an informed minority. And we see that in financial markets a lot, that it somehow seems that there is elite few people that actually know things are going to happen, and they are able to make a lot of money from it. I don't know, Michael Burry comes to mind, who predicted a housing crash in 2008, made phenomenal returns on that crash, while the rest of the world seemed to be in a state where they said, oh, no one could have foreseen that, and therefore it was absolutely not possible to be safe from it. We know it's not true, but it's the common narrative that these things are unforeseeable. So people don't try, and if you don't know something you don't know, then it becomes very hard to benefit from these kind of people. As my little BMW example hopefully showed you, is that there are ways to know in advance what's very likely to happen and to actually benefit from it. That's true for single stocks as well as for whole industries, and of course for the market in general as well. Our roadmap to success. I talked a little bit about portfolio building, and portfolio building is actually pretty nice at the moment because of the cycle we are. In terms of the economic cycle, we are on the top not yet at the highest high. And I think until we see elections in the United States coming up in November, markets will still go reasonably higher. There's nothing too cloudy on the horizon at the moment. And we know that central banks around the world already said that they are going to lower interest rates. They had to put them up high to fight inflation. It's something I was already talking about in 2018. So if you would have followed my webinars back then, you would have known that inflation is about to come, and you would have been able to secure yourself from that, so it wouldn't have affected you as much as it did. However, that's the past. We're now focusing on the future, and we are building our portfolio and structure it so that we will benefit no matter where the market goes. We are currently doing that by building a portfolio out of equities and bonds. And the nice thing about bonds is that if interest rates go down, their price goes up. And in case of a crash, the one thing central banks do is to rapidly lower the interest rates, which will increase the value of our bond position, and equities in a crash, of course, go down, but we kind of counterbalance it. And the nice thing is that we are able to get 5% returns on our bonds on top at the moment. This is a very nice baseline scenario. So without doing anything else, we will get 5% return in case something happens or interest rates go down. We will make an additional 10, 15, 20, 30% on our bond position over the coming months or years, few years. And we still have lots of opportunities for shorter term trades that we can build around our portfolio. This helps us to secure a lot of potential upside and limit our downside, even in case of some downturns, even in crash scenarios. We will have a counterbalance that helps us to not go through these horrific things where markets go down 50% and then you have to figure out how you get up, or you have to wait for another 2-3 years to get up there. We basically took care of that. Then we use some income generating strategies. We have a stable and portfolio that we just built. And then another thing is we want to be able to constantly make some money every month. And therefore we have some strategies that will provide us with these short-term trades, which last for 2 weeks or a month, where we get money pretty much regardless of what the market is doing. And we add that on top of our portfolio. In terms of multiple streams of income, we voted on certain shares that we want to have, and I pre-selected them for their stability, long-term growth perspective, stable returns, and dividend history. And the way we do that is that we generate the income from our strategies before, and then we use that income in order to actually buy these shares. And since we didn't use any of the money from our portfolio, but just the money that we actively make month over month in order to buy these shares, they are technically for free. Of course, we could do something else with the money that we generated, but we built a portfolio of very valuable long-time companies that fit our profile in order to benefit from the stock market growth over time. We know for the last 120 years that despite all ups and downs, we have a stable upwards movement, and we had stable income or stable appreciation stocks in general. And as long as the economy works as it works, this will continue to be the case. And then, of course, we have special opportunities in the market where we will enter trades, for example, the BMW trade that I told you, but also things in trades in gold or trades in other commodities. We had an oil trade recently, foreign exchange, especially when interest rates get shifted up or down from one area to the other. We will have these special occasion trades where we will take some money, enter a trade, a targeted trade for a few days and benefit from these short-term opportunities. And this is combining together to our roadmap, and we use these for different strategies. Of course, every strategy has, every one of these 4 pillars has several strategies underlying beneath them, but we use them to gain exceptional results without taking on a great deal of risk. Which leads us to risk management. That's a quote of mine, that hope is not an option. What we don't do is something like buy and hold. We don't buy something and then we hope it always goes up and up. And if it doesn't, we then don't know what to do. Every trade that we do, or every strategy that we do, has been well researched and gives us an edge in the market over other participants. And of course, it's only a statistical advantage, and every time we put our money at risk with something, something can go wrong and negatively affect our expected outcome. But the key is that we use statistical advantages where we will be right way over 50%, and where we maximize our winnings. We always want to earn a lot more when we are right than what we risk when we are down. And that's to make sure that this is always the case, we have a thorough risk management. In my opinion, it's the most important thing to take care of. You always have to make sure that your downside is covered. You always have to trade in a way that you can come back tomorrow. Today might be a day where you lose something, and of course losing money never feels good, but that if you do this tomorrow and next week and next month and next year, you will make money over time. And as long as this is the case, and you take care that you don't overexpose yourself and that you have proper risk management in place, over time, we know that we will surely reach our target. And I'm there along the way to make sure that we actually do this. So the underlying idea is very simple, always the same. We keep our losses small and we maximize our winnings. The first thing I already talked about is that we build a portfolio to reduce the dependency on a single asset. Yes, of course, currently we might make more money when we would be only long in stocks. But if something happens, the downside would be very, very high. So by building that portfolio, we give up a little bit of money in the short term, but in the long term, we have a stable trajectory. And we can focus on making money in our special opportunity trades, and our portfolio will take care of itself. The next thing is that we put in stop losses in order to minimize our downside potential. We buy something, we have a line in the sand where we say, if the stock goes down, or if that bond goes down, if that currency goes down or up against us, depending on which side we're trading, and we start to lose money, we rather quickly cut our losses and move on. And we make sure that these never get out of hand. The next thing will be macro adjustments. So we closely watch the market environment and adapt to changes. As I mentioned today with the PCE numbers, they could have been different. And if they would have been different and it would have pointed to that inflation is having a big comeback and that interest rates would have to go up, we would kind of see that we restructure our portfolio in a way to take care of these macroeconomic adjustments. So this is something that I personally do quite a lot, watch out for numbers and things that actually have an impact on the market. There are some noisy things where the market goes up a bit and 15 minutes later we're down again. So we don't care about these numbers. We actually care about things that define the macroeconomic situation and where we know we will have an advantage by adapting these things. And the next thing, of course, is education. We want to get better at what we're doing all the time. That's why we come together monthly, hold webinars, help people get a better understanding, explain strategies, answer questions. Of course, every strategy is explained anyway, but sometimes you hear of something, it makes sense to you, but then you have some questions, and then the trade is like a week ago, and then this is the time where we can answer these kind of things. We have an extensive knowledge transfer in terms of what we are doing and how we are doing this, why we are doing this. Everyone has the chance to catch up and get well educated on what we are doing and why it's working so phenomenal. We always aim to keep getting better. We emphasize something that's called a growth mindset, a concept that was introduced by Carol Dweck. It's a great book to read. The name of the book is Growth Mindset. And in today's environment, if you don't grow, you essentially go backwards. If you stay on the place and you just do what worked like back 10 years ago, you will eventually figure out that markets change, environments change, and something that worked very well 10 years ago might not work at all at the moment and might even be catastrophic for your downside. So we always make sure that we keep learning, keep getting better, and share our knowledge with each other. And you don't have to understand. It's like if you look at a watch, the mechanics of a watch, you don't have to understand all the intricate cogs and wheels about what a market maker does and how he does it, and the two-way auction process and all these kind of things. But it helps to have a key understanding of how a market works, what it does, and what tools we can use in order to become more successful and in order to read the market and gain some insight in what's happening and how we can benefit from it. And just to make sure that everyone has the chance to get that understanding, there's no school or university where you can learn these kind of things. Like even if you study economy, like I did at one of the most prestigious universities in Europe, it doesn't help you because they don't teach you how to make money. They teach you a bit how economy works, but not how to benefit from it. So we will provide these educational resources from periodic webinars whenever there are questions. I said it's a monthly webinar, but if we figure out that there's some need to catch up for people, we can make it bi-weekly on a weekly basis, or we can do it ad hoc to explain a certain thing. And everything is explained in a step-by-step process, very easy to understand, and I do that for every single trade. To stick with that example for BMW, I gave all the reasons, like 3, 4, 5, why I trade this, where I put the prices in, like these random prices, 100, 350 to 99, they don't come by accident. There's actually a lot of knowledge behind it to figure out at the day where we sell this stock, the market is retracing to a certain level again. That's where we enter because we get better prices. And our original target was 100 because that's where a lot of buyers come in, because a stock that trades over 100 comes down to this psychological hurdle, usually gets bought there. And we saw some buying activity there, but we ran so fast through 100 that we decided to say, you broke through 100, the next stock will be 99. We went down to, I don't know, 98, 80 or something like that. We all got out 99 or somewhere at that area, and then we went up again. I think we closed above 100 that day. Again, 101 or something close to that. I would have to look up the exact number, but these things, all these price points were triggered, and they get triggered for a reason, and we know these reasons. All this is done in order to make sure that you have the highest chances of success. And I personally aim to have 100% success rate. Whoever starts with 10,000 in the challenge, I want them to get to 1 million, ideally in way less than 10 years. But it's hard to give you a direct prognosis because we don't know exactly what the market would do tomorrow or in a year or in 2 years. So we always have to adapt. We can foresee a lot of things, but if we would be able to know where exactly the market would close tomorrow or next week or in a year, we all would be rich. What we can do is know that with big certainty, it will be somewhere in that area, and this is what we use to make our money. A little bit more about our educational resources, how we get better. The first thing is that we have a complete setup, including pictures. So every trade that I send, that I do, is presented completely. Of course, which asset we are trading. Let's say we were buying a gold mine a while ago, which is abbreviated GOLD. The name of the company is Barrick Gold. So that the asset is Barrick Gold. You get the size for your account size. Let's say we bought 500 shares of Barrick Gold for your account size, and where we cover our losses. If we close below a certain point, this is where we stop. And of course, we have a target where we say we think it will go to this price. And because it's still a running trade, I cannot give you all these kind of things because otherwise people might use it against us, for us, against us, I don't know. But to not influence anyone, I won't give you the details here. But you get all these details in a group together with a picture where you see that this is how you enter the trade and this is how it looks like. Of course, I have to use a certain broker to put these trades in myself, but you, of course, are free to use whatever broker it is. So your platform might look slightly different, but you will get all the key points and the complete setup together with a picture, know exactly what to do and how to do it. Every trade is explained in detail. Why are we trading it? In the case of GOLD, of course, because gold is on a run and we have the macroeconomic outlook of lower interest rates. Since you don't get interest rates on gold, physical gold that you own, lower interest rates usually are good for gold. Our macroeconomic environments tells us that there's a chance that gold might go up further when interest rates are coming down. The long-term perspective is good, the short-term perspective is good. And these are our reasonings. We had an earnings event that we were using to get in. We're now getting some dividend on it as well. All these things and reasons are explained in detail, so every participant knows not only what we are doing, but also why we are doing, and can ask questions either in our chat group or individually. Sometimes not everything is discussed in the group, but you have both options. So you either ask me individually if it's something that you don't want to discuss in public, or you can ask in the group and we can explain these trades in detail. Every month we have a webinar guided by an expert giving more knowledge on certain topics. We had our last webinar on Monday where we were talking about certain option strategies, macroeconomic outlooks, and certain things about margin and risk management. And we will keep doing these things so everyone has the knowledge transfer and gets a deeper understanding. And we also increase the success of every participant, because the more you know about these topics, the more secure you are in your investment decisions and the better your results will be. Of course, if you look at the markets, we have a certain trajectory at the moment, but markets keep changing. And we have to track this. And here's how I do that. So we have a constant monitoring of certain things in the market, and we analyze it, and then we adapt. So it's not only monitoring something to see what's going on, it's also adjusting things to changed circumstances. Let's start with the market overview. We want to know what's going on in the market overall. Where in the economic cycle are we? Are we going up? Are we going down? In terms of the overall economy, are we slowing down? Are we speeding up? And what can we expect in near term? Near term, let's say over the next 3 to 6 months or 3 to 12 months, we know where we are heading, and then we can adapt to these things. A little bit as with gold, we know that interest rates are likely to go down because that's what the central banks are telling us. And therefore, as long as the interest rates go down, it's likely to be very bullish for gold and leads to higher gold prices. But that, of course, doesn't guarantee that gold will go up tomorrow. We know that there's an increased likelihood that it will be up over the next 1 or 2 years, and that's where our trend analysis comes in. Apart from the bigger picture, we want to make sure that we are profitable in the short term. That's where we have our trend analysis. So even though our overall trend could be very bullish and pointing up, we might be in a shorter downwards trend where we actually would be losing money if you would buy gold today and wait for another week or 2 or 3. And this trend analysis helps us to buy things at points in time where price and direction works in our advantage. You might have heard of the old adage to trade with the trend, or the trend is your friend. And this is basically what we do on top. So we have a long-term perspective where we know it's positive, and then we have a short-term perspective where we know either going up or down with a certain likelihood, and we want to figure out when is a good time to actually start into trading into the right direction and trading with the trend in order to get maximum of results, and at the same time limit our risks, because if we know we are now trading with the trend upwards instead of fighting the trend on the way down, we have increased likelihood of success, and we have far less losing trades as if we just jump into because our analysis for long term says it's going up. There can be weeks and months in an upwards trend that actually go down before we get to the next leg up. The next one of our list is economic indicators. So we want to be aware of heightened volatility and changes in the markets, because these occasions can generate opportunities, both in currencies as well as commodities, and of course during earnings seasons a lot in shares. We want to know what the economy is doing. We have our leading indicators that tell us for the next, let's say, 6 months, 6 to 12 months, what's going to happen and or what's likely going to happen. And we can use these economic indicators to give us a clue. We get short-term market opportunities out of that and can make very good return in a couple of days and pocket that in next to what we do in our portfolio. And these economic indicators oftentimes indicate what we should do in our portfolio. So we look at our portfolio and we are like, we might be, let's say, long in technology shares, and we might be long in bonds, and we might be long in the general market, and then things change, and then we might switch from technology stocks into, let's say, the retail sector or the real estate sector or something like that. So we will permanently monitor what's going on, and then we will adapt and change our portfolio based on our new insights, and therefore we basically achieve the very same thing. So we get higher returns and we minimize our potential losses because we trade things that are in demand and that are foreseeable in demand, and where the macroeconomic numbers and indicators are in our favor, both long-term as well as short-term. The things are very much aligned. It's usually a very good place to be invested. Our goal is to trade 10,000, our starting point, $10,000, euros, whatever your currency is, and to reach 1 million. Of course, you can start at a lower point, like $5,000, but I calculate the base scenario at 10,000 because it's a round number, and I would say if you invest in yourself, 10,000 is a good number to do. But I totally understand that not everyone wants to start out with 10,000. So you could start out with 5,000, and then after you get used to it, you see how it works, how well it works. Most of our participants by now have started to put more money in order to reach that goal faster. That's, of course, always something you can do. But I have to calculate somehow. I started at 10,000, basically because that's my personal story. I don't want to bother you with all these details, but when I started my journey to financial freedom, I had 10,000 euros in that at that time, and then I traded that up until I became financially free. Why is 1 million our goal? Of course, it's great and feels good to be able to say you're a millionaire and a real millionaire, which means you have these actually in liquid form. So it's not I live in a house that I own, and when I pay off the bank, it might be valued at 1 million or something like that. But this is real money that you have available, and you can do with it whatever you want. It has nothing to do with your primary real estate. If you have some or you don't, you're a real millionaire having a liquid $1 million or 1 million euro at that point in time. And second, if you think about that you want to, let's say, retire, if you use that million and you get an average of 10% on a stock market ETF, this will generate you 100,000 per year on average, and that for most people should be enough to pay the bills, and therefore you could consider yourself financially free. Of course, no one tells you to stop at 1 million. You could go for 10 million, 100 million, whatever, but the goal is to become financially free, and I would say that people reach that goal at 1 million. I basically offer two options in order to join the 1 million people challenge. The first option is if you are just testing and you want to see if it is for you, if you want to do that, that's 147 euro per month. And therefore you participate in 1 month, and then after a month you can see if it is for you, and then you can prolong and get more money in your trading journey. And the second option is what I call all in, where you pay a year in advance and you're like, I really want to do that. I want to become a better trader and investor. I want to have greater results. And therefore, for 1 year, I go all in and I want to get the maximum out of this. And of course, if you commit for a year, the price is far better than if you're just dipping your toes in. So you pay 97 per month, and that's for 12 months. And then you can, of course, prolong. And after hopefully less than 10 years, you are one of our millionaires and enjoy the community and the people you meet along the way. If you're interested, I don't put up buy now link or you have 15 minutes to decide right now, all of that kind of nonsense. As I said, I want to make sure that every participant reaches that goal. Therefore, I would like to have a little talk with you, schedule a little call, make sure that we get your own personal financial liberation plan, make sure that it is a fit for you, and that you can benefit from it. So if you are interested, contact us. You can either do that via our website, millionpeoplechallenge.com, or you can send us an email at joinus@millionpeoplechallenge.com, and we will get in touch and get you started. I want to thank you for listening to me today, and if you have any further questions, feel free to reach out through our contact form or send me an email. I'm happy to answer all of them. I'm very happy you joined us today, and I hope to see you soon and be able to guide you on your personal challenge to trade 10,000 or to turn your 10,000 into 1 million. Thank you very much, and I wish you a very good rest of the day.